Iran is being attacked by America, and as a result, oil prices have gone up. Now, the national news broadcasters that you watch are probably telling you that markets have taken a hit, that equities are being hit by this, and oil prices are going up, which is going to cause inflation. And they're a little bit late to the story. We discussed all of this last week, and this week we're going to take a deep dive into the technical analysis on the important things in the world. I've got the Bitcoin chart beside me just now. We'll be looking at oil, gold, US equities, and other interesting things in today's show. Thank you for joining me. I really appreciate seeing you in the audience. Hit a like and all the other good things that we ask you to do on YouTube, because it genuinely helps. I genuinely would like you to do that. I would really, really genuinely appreciate that. So please do. Let's take a look at the major story, the major story, which is oil. And yes, that weekly chart with this huge upward candle on Bitcoin is extremely intriguing. We will come back to visit that. It's going to hide my some indicators here so that the chart is a bit cleaner actually. We have got this chart to come back to. It's going to be good. First off, let's just put a little perspective on things, right? Oil prices, yes, they've gone up. And the major equity market news today actually has been how bad Korea has been hit by it. Especially last night / this morning, depending on where you are in the world. That was the major story. Looking towards European markets opening and then US markets opening, the headlines couldn't help but talk about Korea, and my word, that's such a big deal. We're going to take a look at that in just a second. First off, oil. Just to put this into perspective, this is the weekly time frame on oil. I wanted to make it nice and clear to people, because I'm talking about ranges here, that while the prices have shot up, this is not a candle which speaks of extreme bullishness. First off, this is the first point. That candle there is not a really bullish candle. These ones that have got huge wicks above and below them, they're not very bullish, right? Technical analysis experts tune into the show will be will be delighted at my succinctness with that one. So my point that I'm making about oil is the markets are panicking, but let's put that into context, because the range has not been broken on oil. Oil has not gone crazy. The news has gone crazy. Shout out to the UK news watchers who've heard that natural gas prices have doubled. What that's in reference to, of course, is wholesale prices, because the actual price of gas has not doubled at all. So we're going to just put some things into context. Currently, the price of oil is lower than it was in June of 2025. It's lower than it was in December of 2024. And we're currently inside a range right now. Yeah, am I being contrarian? Am I being contrarian by pointing out that this range, being within this range, is not yet enough to say that there's a global oil panic and crisis, and that we can use technical analysis to identify perhaps what might be panicky? I think that some context is worthwhile popping in here, right? There is this pattern I had on the charts for a long time. This is back when Joe Biden was the president of the USA, the Sleepy Joe, as he got that nickname. It's quite a cute nickname. So this was a triangle that had an expected price target on it down towards $50 that we had on the charts for a long time. If we measured just purely from the breakout down to as low as it could have gone, it would have taken us to $50. The low came in at 55, which is actually lining up from where prices eventually, you know, the range, this green box of the range we just drew in over the current prices, lines up with that. So we've not even made it back to the period of time where we're back into the prior range before. If we break above this range, we would go into the old range. What is that? You could look at that triangle I have on the charts just there. I'm just going to take those lows and the high for the range and say this, roughly speaking, is the prior range highs. So $93 becomes significant. I'll just mark that on with a horizontal line. $93 breaking above this general price here of around $80 and sustaining that with opens and closes across larger time frames, such as minimum 4 hours, looking towards a day, 2 days, then yes, movements towards 93 become easy to predict, and they would be associated with big problems in the Strait of Hormuz. Big problems! The Strait of Hormuz is the bit of water below Iran where all the Middle East oil producing nations pump their oil into boats. So you've got Qatar, you've got Saudi Arabia, Kuwait, Bahrain, UAE. Like, there's all these countries that are there, not just Iran. And Iran then says, we're closing the Strait of Hormuz. We predicted this last week. And what we said was that the problem wouldn't be rockets hitting boats, but the price of the insurance the companies that insure the oil tankers charge would go up. And if that went up, the boats might not move. The price of oil has gone up if you consider the low in December to be what we measure from, $55, to the current price of $75. That is an increase of nearly 40% that we're looking at. And $20, if that was all going towards the insurance for the oil, then the boats would be moving pretty quickly through the Strait of Hormuz, despite the fact, because they'd have a bit of the threat of the Iranian missiles, because they would have the insurance. So it's really a case of insurance. America is moving in to protect the boats. Now, are they going to protect them with missiles, or are they going to protect them by reducing the cost of their insurance premiums? It's a bit of both. But you could then say the lack of supply of oil from the Strait of Hormuz is a problem for oil prices in the short term, because people demand oil and it's not being delivered. And that is a very good point. Rather than speculate what could happen to the oil prices if it broke up above the prior range, because we've already talked about the bullish case. If you weren't paying attention, 4-hour closes minimum, but spending time across a couple of days above $80 makes me think $93 is the target to aim for. But I'm not really feeling that yet, because prices have not done that. That's because they're still in the size of the prior range, which I'm just drawing on with this bracket here to see they're still within that range, and actually movements within this are more likely until that changes. So filling in the gap at 67, short-term bearishness, that could even happen, something like that. But let's remember, rather than discuss a bullish move above that, or just predicting prices of a bearish move below this based on prior ranges, let's just instead consider for a second the fundamental problem when oil stops moving. If the oil does not get put onto boats and taken to its destination, does price of oil go up or down? At its core, the Strait of Hormuz being closed is oil not going onto boats and not making it to its destination. Do you understand, right? So the question to you, if you're watching this now, is will that make prices go up or down? The world is telling you it makes prices go up. Short term, it can make prices go up, yeah. But let's think about the last time in living memory that the oil platforms, the derricks that suck it out of the ground, the oil storage facilities on land got full. What happened to the price of oil? And if we just look over here at this chart, which is CL1 exclamation mark, you can see that not only did it go down to zero, right? It went below zero. Yes, literally below zero. And the price of oil became minus $40, where the people who were trying to sell the oil were paying the person trying to buy the oil to take it off them to the tune of $40 per barrel, including shipping, insurance, and delivery. Why? Because you cannot turn off the oil tap when you turn it on. And the storage, if it gets full in Saudi Arabia and the surrounding countries which rely on the Strait of Hormuz, if those oil storage stations get filled up and all the boats are full, you would be the fool for thinking that the price of oil would go up. Longer term, you're going to have a glut and prices would drop. So if a few days, it's been less than a week, of disruption in the Strait of Hormuz is enough to cause global oil panic demand surge, then we can anticipate it breaking up above and prices going to $93. If, on the other hand, any sort of movement back to normality occurs, we can expect prices to stay within their range. If a doomsday scenario happens where oil is being sold by countries that cannot deliver it to you, then you're looking at potentially negative prices, reversing it. I think it's important to point that out. We're going to just take a quick detour around past natural gas to show my UK viewers the price of gas. That's right. As compared to 3 weeks ago, the price of gas, just as normal global markets, well, American open markets, compared to 3 weeks ago, the price of gas is down 60%. It was $7.40. It's currently $2.90. It's not what you've been hearing in the news. What instead you've heard is about things like UK wholesale gas prices. Can I get them up here for us? Yep. And you can see here that on this chart, there was a spike up to 170, which had come from lows of 78, 70s. So it went up by like $100, which made everyone in the UK panic. Currently, wholesale prices are $127. And as you can see here, the story about the range is also true. And the story about gas storage filling up is also true. This is the range. We're still more or less inside it. That's gas, wholesale UK gas prices. Bearing in mind that places like the UK, which has the largest liquid natural gas to gassy gas state natural gas conversion plants in Europe, can buy from these American markets. Let's just look at the price of them. That's right. Less than $3, when 3 weeks ago they were $7, meaning the boats that left last week are just arriving with nice $3 gas in it. What does it mean about liquid natural gas? Well, the UK is capable of turning liquid gas into gassy gas and sending it to your house, or indeed to France and Northern European households. That's unusual compared to other countries that rely on gas, which is gas form coming through pipelines in Europe. So much so that the UK's got a really strong position in this front. So UK wholesale gas prices, where the UK itself is able to take advantage of American cheap gas, liquid natural gas that gets sent on a boat over at significantly lower prices, you're talking $2.96, is definitely possible. So just the fear doesn't really take account of the reality. I just wanted to bring that into contention. I wanted to introduce reality as something that might contend for some of your attention, especially if you're an investor looking to make investments soon. Let's go with the biggest hype scare story. Don't know what you were hearing in the USA during last night. Your time zone difference might be enough to mean this didn't feature for you like this morning during your news before markets were live like they did in the UK. But Korea was a big story. I can just give it the old Google search. Korea, just so we can see what the headlines are saying. Korea market. That's enough for a news search. Panic sweeps Korean stock in biggest two-day crash since 2008. What does that headline say to you? Panic sweeps Korean stocks in biggest two-day crash since 2008. Makes you think that things are going badly, doesn't it? That's that headline. Korean stock market plunges 12% in historic one-day crash. There's another headline. Does that make you feel good or bad? Generally, just roughly speaking, general opinion about the Korean stock market. Genuine question. If you're watching this as a recorded video later, put a comment down below before you see the chart what you think the situation is going to be, good or bad, and tell me what you think after you see the chart. If you're in the live chat of this video of watching it live right now, let me know in the live chat, what do you think? Is it going to be good or bad? Here we look. Let me see now. South Korea's had the worst day ever video 10 minutes ago, right? So when we look at the charts here in a couple of minutes, what are you going to think that headline, Korea's worst day ever? Let me also tell you that Korean markets were closed, right? It got halted and closed yesterday as well, having had its worst day ever yesterday sort of thing. So what do you think we're going to see when we look at them? Let's go and look, right? Have you got your comments in there? Let's just see if you got your comments in there. Live chat, let me down, lazy live chat. They've not put in, what you're supposed to have said, live chat, is that you expect the markets to look dreadful, right? Okay, I'll answer it for you, live chat. Jeepers creepers. You'd think they would just be able to answer a simple question. Those headlines sound awful. Let's look at the chart. Yeah, so I would generally say that this is one of the most bullish charts I've seen in my life. Just generally speaking. Now, just as my first impression as this popped up, how did it correspond to those headlines? For those who are visually impaired, what you're looking at here is that there was a high in 2021 of 3,333 or so on the Korean stock exchange, right? Then it got to 2022 and there was a low of 2,000. Then we head into 2025, June of 2025. Remember when oil prices were at their high, for example, of the high of the last range, June 2025, the Korean stock market was at 2,872. If we jump over to the high we've just seen, which was 6,347, you'll probably be able to work out in your head fairly quickly that that is up 175% from the lows in March of 2025. What? So in the space of a year, the Korean economy is nearly tripled in value. And the headlines that you woke up to this morning were about how oil has gone up. So the inflation is going to cause you massive problems. Watch out, folks. Inflation is coming back to your oil prices. Oh my God, it's so scary. Are you scared? Are you scared? And if you didn't feel scared enough, they'd say, well, you should be scared because the Korean markets are going absolutely dreadfully. Now, let me tell you, genuinely bad news is happening in the Abu Dhabi and Dubai stock markets, right? I'm not downplaying the effect of this. If you are sitting on the edge of the Strait of Hormuz after 500 ballistic missiles, 2,000 drones, and 2,000 Israeli missile strikes have happened in the last 24 hours, and nations around the world are chartering flights to take their stranded holidaymakers and expats away from the area and so on, that is bad news, and I'm not going to downplay that for sure. But it's not really all that bad. Now, what about your American indexes? Here's another chart, which is one of the most bullish charts you've ever seen in your life. That's right, it's the American stock market. SPX 1 week chart, you can see it's had a bad week. Now, we explained in last week's video what happens when war kicks off. You'll want to watch that video if you haven't watched it already, because it explains everything that you need to know about what happens to the stock markets historically when war kicks off. But there's a couple of additions I need to add to that. One is that historically America's never really gone into wars when it's been at all-time highs. It tends not to do that. The cynic in me would like to say some sentence about how war being good for the economy means that the Americans will kick off a war when they think the economy is going badly and to try and boost their economy. That would be like the logical flow that you might go with that. And if the chart in here had SPX at some sort of low, you might make that assertion, but it's been a really bullish 20 odd years now at this point. So that's not really the case. Another thing that you might say is that we don't have, it's not charted territory to know what will happen if the markets go up into all-time highs while America is conducting a war. So that's another thing that's worth pointing out. Another thing is that war, and I was very explicit about this, I said it a lot of times, but I realized that people need to be told what to listen to. So the sentence that I said a lot of times that needed to be heard was that there's uncertainty going into war, which sees a drop in the markets, which we have seen on the American markets, drop down here, caused by uncertainty. If you're watching this wondering why my colors of my candles are odd, it's because they're determined by a momentum oscillator. It's just a bit of fun. There was a drop down running into it because of uncertainty. When the war kicks off, certainty normally increases, and that leads to a rise in markets. And there's a few distinctions to be made here. One, the war that the America's doing, I explained this again as well over the last 2 weeks, is that they were waiting for something to make it legal while they negotiated with Iran. Iran made it very clear to them in the negotiations that they were not going to attack them and make it legal to start the war. So America decided to start the war illegally. The UK, for instance, called them out. The UK is the one who is the actual judge and jury when it comes to international law. So America doesn't have its hands on the reins of international law. That is the UK. And the UK said it was illegal, which was quite bad look for Trump, who is, of course, the president of peace. And then Hegseth has tried to say it's not going to be like Iraq. I mean, I want to quote Hegseth. I know that from a military perspective that he was speaking in many ways to the heart and minds of vets who want to know, is this going to have the same problems as Iraq? But in terms of, like, you know, speaking to the wider populace and to the world and the markets and so on, he came across a little bit kind of unprofessional. There isn't really a plan currently, it seems, and all these things cause uncertainty that isn't normal for America to be doing that when it's having war. Instead, America's very righteous, very forward about its objectives, and even if they're completely unattainable, by the way, it doesn't matter. Like, everybody knew that Iraq wouldn't be fixed in the space of a few months, but America at the start of the Iraq war came out and said it would be, and everybody was like, okay, cool, let's bet on that, because that's the way the game works. So America's given us none of that. It's also been doing it with Israel. Now, the problem with Israel is that American markets love it when Israel attacks places, generally speaking. America likes Israel attacking other countries. It's not the same in other markets around the world. And but over the last couple of years, Israel's reputation has taken a bit of a hit because they've conducted the big old G word in Gaza, you know, and its reputation is not as good as it used to be in terms of trustworthiness. So a school was hit by a bomb, and that causes a lot of problems in America. For one, Americans were told there'd be no more foreign wars in the run up to the elections. That was a promise, an election promise by Trump. And here we are having a foreign war. So that's not a great start. Then they didn't want to have any blood on their hands, including the American soldiers. And there's been a few already, and that's not good either. But then a school was bombed, and 125 children, mostly girls, were killed, and America hates that. So that's America really hates that. Now, when asked about it, Hegseth was unable to say whether or not America did it, which is really bad, except everybody thinks Israel did it. So the fact that he didn't just at least say that they did it or whatever is really bad. So there's a lot of uncertainty, really kind of bad stuff happening, right? That goes around this. You know, it's illegal. It's killing children. It was a break in the election promises. So a lot of uncertainty exists around that. Nevertheless, today and yesterday have been stonking good days on the economy for the US markets. Lows at 6,700, current prices up there at 6,800, looking at a 3% rise over the last 2 trading days, absolutely undoing the damage of the previous day or so as well, leading into that. So things have been bullish. What we said last week is that when the war kicks off, there will be volatility as before it decides what direction it's going. What we've seen since, exactly that, volatility. So this is working exactly as we said it would last week. The certainty is not there yet, right? Get some certainty, things could improve quicker. Get some moral clarity and ethical guidelines and promises to stick to them and accountability for those who don't. Things would go even better, quicker. But it is America and Israel doing this war, so those are almost certainly not going to come for us in the near future. So markets are still waiting to see which direction things will definitely go in terms of, well, everything really right now. But we're poised right now at that mid to post volatility. We're having volatility here in the markets. We're poised there looking at that. So what would you expect to see if things were going terribly? You know, overall, is this a terrible bad decision and so on? Gold, the safe haven, people might jump into that. Over the last couple of days, gold is obviously dumped down. So that's not an issue anymore, right? This could actually signal to us that there's maybe even change in trend here. It does look bearish, and until price of gold is steadily above 5,500, then this is actually a bearish setup. Just like before, when gold reached as high as 4,500, this was a bearish setup when it failed at 4,250. If it had taken out 4,000 again, it probably would have gone as low as 3,500 or 3,000. However, it pushed up, it remained uncertain, and then when it pushed past 4,300 again, the price of it, it became quite bullish and went on to all-time highs, all the way up another 2,000 to 5,500. But this right now remains a bearish setup. Like in terms of technical analysis, risk reward, this here is, I've said it enough times, okay? So that is a sign. Now, silver was the headline. Oh my goodness, we've not got enough silver. It's such demand. It's so precious. Silver is like the new gold. Well, it's currently at $83.55. It remains garbage. Precious metals remain garbage right now, especially if you've got money and you're looking to put it into something. Over the last couple of days, you'd have put it into oil, right? Because everybody and their mother knew that oil prices were going to go up a little bit here, and they did. Where did they go to? Prior resistance. Shock horror. Traders sold it, shorted it there, and there's been volatility at these highs ever since. This is a short trade setup with a relatively low risk. That's the oil market. Natural gas, it's doubled. The price of it is doubled. It's actually down by 3/4 or 2/3 down in price, that sort of thing, over the period of the last 3 weeks. So that's that. SPX had its negativity running into the markets. It's had its volatility when the actual rocket started flying, which is the visual component. It's within its prior range. It's at the middle of the prior range. Go on to all-time highs. This thing just is going to be like very much an exuberant and fast move up higher, as people just don't know where it's going to go, but are very much happy to put that money into something because they'll be taken out of what? Gold, silver, and oil. Okay, so all the money that comes out of gold, silver, and oil has to go somewhere. Will it go here, or will it go into cash? If cash becomes trash because Iran is going to get run over fast by America and everything be okay, then this could be a major setup, which brings us back to the Bitcoin chart again. And I want to say that last week I spoke about the nature of bullish engulfing candles on the Bitcoin chart. Today the price is 73,000. I said last week if this is able to stay above 73,000, then it looks very bullish because it could be moving up higher, and it would move up to where? Let me remind folks, by using the same green colored box, here's the prior range, and it is now within this moving up. It would be a retrace. Here's the Fibonacci retracement tool. It is had a low today which confirmed the 236 as the low and is broken above the 382. These are significant mathematical numbers, and the target for us, which we've achieved at the breakout fakeout zone, has done well done. That's the first target. Second target, 76,600. Third target up here at the 618 golden pocket zone, 81,000. Doesn't even take us back up to the prior highs of the range. For people who are confused about ranges and so on, here's the oil chart yet again. Here is the price of oil, and there was a range, a prior range. And if I just use something like the replay tool, sorry to for all the people who already have brains capable of understanding basic logic and don't need to see this, but there are other people out there in the world. Let's take a look at how this sort of thing can go. You've got prices here that are at lows. This is how it was back here in January, around about the 6th, 7th, 8th, 9th, 10th, 11th, 12th of January. And then you see, as prices break past their prior lower highs and move up into the range, they aim towards the top side of the range. So if we go back to Bitcoin and think to ourselves, well, what could happen if this here is the start of the move where you break past these lows and go into this zone? It could move up rapidly, like we just saw on that other chart. Technical analysis shows you this happening all the time. It's very frequent. News stories don't explain it. Economics doesn't explain it. Fundamental investors can't explain it, don't understand it. Technical analysis, it's nearly self-evident. What we're looking at is the potential for this to be a breakout. Ethereum above 2,100 is very bullish, as I said last week, drawing on these lines for where the take profit is on the trade, which is now currently hitting. Well done to us, as that has happened. Very, very good. That was the first target. Where do you think the next target is? It's the next line up. It's $2,500. Anyone who watches my show on a regular basis and has been trading this will have a position which is easy to manage with a stop loss in profit. If you're just getting into this now, what you're looking to see is whether or not prices can sustain momentum above this area where our prior profit taken was happening at. Because in this zone that I'm highlighting now, there is a high chance that bears will come in to short the price down to do what? To try and take it and keep it within the range. A reminder again, and this is to folks, I know most people out there won't need it, but I'm trying to help everybody stay along. The black line I'm drawing is like that oil chart, and then this low that happened is like the low in the oil, and then it moved up towards the top side. And if it had not managed to break past these lows, it could have gone lower or stayed within this range, but instead it broke higher and it went up towards a prior high within the area. But first off, it had to make this break at the lows. Why? Because if you zoom right on in, then these ranges have the same dynamic as if you zoom right on out to these higher ranges. If I zoom on into this, then this range down here has the same dynamic as the higher ranges, which is visible on something like a 4-hour chart, for example, where we can see that there was a high and then a range formed and it went to the top of the range, and quite likelihood overall for range trading sort of philosophy is that is a short that would then see prices drop back down. So the prudent trader waits for something like a $2,013 price point on Ethereum to make a lower risk, easier to manage trade, where they've given up half of the risk of this range. Or they can wait for the low side of the range and give up all of the risk, just not take any risk on that they might not be able to make it outside of the range, so that every movement inside the range is profit for them. But if prices sustain the movement above here, then they can get a breakout very quickly towards top side. And that makes things quite an interesting setup right now, when the news media is telling you that Korea is having a disaster. Let's remind ourselves, Korean stock market plunges 12% in historic one-day crash. South Korea's worst day ever. And that's how they interpret things. And we look at the charts and we see that Korea's chart is absolutely amazing. And that this retrace down here is natural, given the parabolic movement up it's had, tripling in value in just the space of 6 months. That's insane for a whole country's national index. How does that even happen? So this movement down here has got a lot less to do with Iran and the Strait of Hormuz than what the news likes to make out. But the catalyst to get the perception of risk and where you're putting your money, where that catalyst came in at, was of course with the Iran conflict. And of course it's seen a drop down here against this parabolic move up. What has a chart that looks like that? Here's the gold chart. Here's the gold chart. Look at this. Gold movement up. Huge retrace after a parabolic run. Why? Well, I mean, this was partly due to Iran and to Warsh, the nominee for the Fed chair, and so on. All these sorts of ideas. They came in, they made a huge drop down, massive parabolic run up beforehand. So it's natural. And you've still got huge amounts of gold bulls out there even now after that. So what is it really being saying? What it's telling us is that the mainstream markets are very fearful, so much so that they're panicking about oil, which is merely returned to the top side of a range, which exists below the consolidation and the ranges of the prior few years, still exists overall as being in a relative discount zone since the highs in 2021, 2022, and has the opportunity to drop down and surprise everybody, because it isn't rockets hitting the boats, it's insurance costs going up. And on insurance costs alone, there's a premium of about $10 being paid for oil over the last couple of days. And that's an awful lot of insurance per barrel of oil when you work out the maths behind it, how these things actually work. It's an awful lot. So what do we see? Fundamentally, if the oil storage, where you cannot turn off the tap, you can't stop drilling for oil once you've started, you can't stop. If that fills up, the price of oil gets cheaper. The boats can't take it away. That means it's filling up. So this is very much short-term panic with longer-term glut. If things resolve somewhat easily, as Hegseth, while keeping his cards entirely to his chest, refusing to tell us what the plan is, it seems to claim that it'll all be done pretty quick and be dead easy for the lads. So let's take that at face value for now. And SPX, of course, back into the middle of its range, looking to think about moving up if it gets confirmation and clarity. Hard to get. If it had any more sense of morality or ethics, it'd be much easier as well. Unfortunately, this war is bereft of legal stance, morality, or ethics as it stands right now. Has got conflicting messaging coming from the leadership as to why it's happening. And you've got like Marco Rubio outright lying about it being self-defense and stuff like that. You don't amass troops around a country for a space of a month with the biggest mobilization of forces that the planet has ever seen. And then rely on Israeli intelligence for when it's going to be a preemptive strike. The UN doesn't care about it. The UN can see through that, Marco Rubio. But the fact that he's up there lying is all that matters, because the lies becomes the story becomes the history becomes the truth, even if it started off with a lie. And that's just how things go. So we're happy enough to see this, but we haven't got the clarity that we want yet. Over the next few days, we start to see that clarity coming in. Really great. Another prediction that we made last week was that the son of Khamenei, Mojtabi, would take over as the leader. We've still got that prediction. He's now moved into a favourite spot. Yes, we were way ahead of the time there. We actually predicted that last week while Khamenei was still alive. So we predicted things really well. Really seeing the future over here in this channel. It's amazing. So much for that Council of Excellence, the 13 members that are supposed to elect him in. They're not really needed, as we already knew from last week. And well, we knew it. If you recall, by the way, the knowledge that he would take over became known to people who are paying attention back whenever the helicopter crash happened with the Prime Minister and the Vice Prime Minister, if you recall that. You might recall that. It was really big news. You'd think that the country invading Iran would have some sense of its general news when the Prime Minister and Vice Prime Minister are in a helicopter crash and one of them died in the last couple of years. You'd think that if you're going to invade that country, you'd have a general sense of like these sorts of things about the country, wouldn't you? Probably, I don't know. Maybe you don't even know where it is on the map. I don't know. Yeah. So Yeah, that's the situation, and literally nobody is happy about this right now. Like literally nobody is happy about this. One of these moments, rare moments in America, where across the divide, everybody can get together and say that not only is this not America first or making America great again or particularly democratic, nobody really understands what's going on. And you know, the guy Hegseth reminds me of somebody who, like in a teenage movie when like the girl says to the guy on prom night that she's not interested in him, and he goes off and drinks a hip flask of whiskey behind the bike shed, and then starts a fight with somebody, and then goes home and feels really sorry for himself, and everybody's like, man, you're just a fool and you're a bit of an idiot and you're definitely a teenager. Well, that's Hegseth today. I mean, I don't know, he's like, what age is he? Must have a mental age of about 15, 14, I don't know. So it's hard to get that immediate kind of confidence that the world needs compared to George Bush and Tony Blair that just dripped in it. Just dripped in it. The Iraq thing was illegal, by the way. It was illegal. But the way that those guys did it, it was like boys club, like Lord, like it was like the James Bond level of it's illegal, but we're going to do it anyway. We're going to be like cool guys about it. And this is insane to be saying this about the loser Tony Blair and the freaking monkey George Bush that he was. that the 20 years of perspective has given us makes them look like seriously cool dudes by comparison of the likes of Hegseth and Trump and Keir Starmer, which are complete jokes. And oh my god, I can't even bring myself to think about the UK Parliament and Cami Badenoch and all of it is just so cringe. But we live in this world now, folks, right? And we're investors, so we need to get personally embroiled and we have personal stakes and feelings about it. We can remain separate to that. Anyway, I'm thinking if there's something to look to, it might be in terms of penny stocks, interesting stuff coming up. Earnings, not really sure when the earnings are going to come out for this. Just keep on waiting for them. But a huge move up in Lisbon, relatively speaking, since when we were talking about it just the other day. There, it's gone up by like 20%. Pretty good. It's a positive start. I'm quite happy to see this. So maybe we start to see some of that middle belly in the economy risk come back into play. Inflation's been pretty good recently, of course. Oil price volatility right now. How much is that going to impact inflation? I mean, it remains to be seen, but it's certainly a short-term blip right now, and inflation is more about trend and trajectory, okay? And the impact of inflation is 100% about trend and trajectory, right? So, just so you understand, this may cause inflation, but inflation causing damage to an economy is required to be sustained inflation over a longer term, and to change the trajectory of it. However, the trajectory for inflation is down more or less, and that's good so far. Okay, so the basic middle belly of the economy aspect remains in play. Domestic kind of issues in the US will become important again and get focused on again. There is a problem currently that domestic issues in the US would need to be something like higher oil prices, higher gas prices, because currently they're just things like ICE and Epstein and whatever, serious problems that need to be fixed, but what we all know are not going to be fixed, therefore they need to be distracted from, therefore Greenland, which didn't work, therefore Iran. So here we are in a massive distraction phase, but we will get back to the domestic concerns and look at the middle belly of the economy a lot more soon. One of the things that I'm really looking at with interest, of course, is the altcoin market, where I think there could be a huge setup. If I just gradually graduate through a few things for you to understand in terms of technical analysis, what you need to know is that altcoins follow on from the Ethereum and Bitcoin charts. So if Bitcoin's going up and Ethereum's going up, altcoins are going up too. But altcoins have got way more risk. So the multiplier is way higher. If one goes up $1, an altcoin might go up $5, right? That sort of a thing. But relatively speaking, that is. Now, So the opportunity for outsized gains exists on altcoins, but the risk is so much higher. Structurally, we've been talking about the structure of that chart, that Bitcoin chart, to say it could be like oil and move up to its prior range high because there'll be some sort of momentum and catalyst to keep us going that direction if we break the key levels like 72 grand, 2,100 that we spoke about on Bitcoin and Ethereum. And that's happening. And structurally, that candle is sticking up past the range of the lows. It looks like it's broken out and moved to a different phase. Quick reminder, Bitcoin here looks like it's broken out and moved to a different phase because it's gone past the range here and it's pushing up. Ethereum looks like it's broken out, looks like it trying to break out, right? Looks like it hasn't quite got there yet. If this moves up and confirms it, then we will see a host of other things start to do similar. Here is Solana right at the edge of its range and so on. So we'll just take a little look at the range. Here we are right at the top of it. Clear and obvious short, right, for the range trader. If this breaks the range, that short it capitulates and turns long very quickly. And the longs are carrying it, so that gives you extra momentum, which is why people have breakouts. It doesn't just tend to kind of stroll out or crawl outs. They're not stumble outs, they're breakouts, right? And the reason for that is because that dynamic of the shorts turning long, adding double the money, and that adds momentum. So what could the targets be? Well, this is Solana. It's like one of the biggest cryptos out there. It could move up to $150. Right? So you're looking at 93 up towards $150, a 50% trade, potentially. Ethereum, right, by comparison and so on, it's moving up from $2,500 to about $3,000, maybe a 50% trade, possibly. Bitcoin, up to the highs, what would it be going from 73 up towards 97 is a 30% trade, not so amazing. We've got 1 inch over here, it's high at 17, current price around 10, a move up here would be 67-70%, so now you're starting to see bigger gains. Here's another one, Coty, its move up, it would be a high recently of 24. We've got 12 as the current price. That's a move up of 93%. You're looking at nearly 100% gain on that one. You've got Polkadot. This one here, slightly different, right? Slightly different. Instead, we see a range down below and it's already broken it. And on its first move outside the range, it had an increase in price of 20%. So that initial momentum carried it 20% higher because the shorts got caught in the wrong position, had to cancel, and that doubled the momentum and pushed it 20% in the first move. It still has a potential to go from its current prices of about 150 up to its prior high of 50%, but it's already done some. So you start to see a more detailed picture. Here's Atom to its prior high around $2.50 from its current price of around 190. It's got about a 30% movement up. And then we can look at some bigger options. Here's another one from its current prices. This is a real layer 2 Ethereum coin. For people who don't know about crypto, that means much higher risk for investors. For people who do know about it, it's like one of these ones which may or may not be useful. One of the reasons I like it is because recently the leader of it quoted Vitalik Buterin and said that the goals that Ethereum has are what it already does, which is kind of interesting. But until the markets turn bullish, this is dreadful. It has 121%. It could move up just to get to its prior high. And here's another one. You got Avalanche. It could move up, for example, 50%. So there's plenty with 50, 60, some of them up to 70, 100%, 120. The ones that are go up to 120 and so on are higher risk, but much higher reward. And it depends, if rising tide lifts all boats, then the aiming up towards those highs is realistic, even if the thing is a bad project. And what is this? Even though this seems like huge, you might think, oh, that's so huge. That is not possible. I want to put all of this into context, right? And that's what this show has been about. The context, understanding the context. First, let's look at how unrealistic this move is of, say, 50%. And I'll go to a chart you're all familiar with at this point. Back to the oil charts, folks. Let's look from the lows to the highs, right? You had a move, let's just say from roughly around there, that's about 3/4 away towards the lows, to around about the highs. That's a move up of 35%. 35%. But if you just think about it in terms of easy numbers, you got below 55 to nearly 80, which is nearly $25 in price that it went up, which is nearly a 50% rise. Okay, a reminder, using real world maths, it actually went up 42%, something like that. So how realistic is it? Well, that's one of the most traded markets in the world. Another shout out to ourselves in terms of these big moves. How realistic are they? I called, and I was the only one to do it. Yes, I tried to find others who had. Don't mean to be blowing smoke up my own ass so much, but I did call the biggest ever drop in gold, the biggest ever drop that's ever happened in the history of the gold chart. And I came on to the show and told you all it was going to happen 48 hours within it happening on my weekly show, having built up in the previous weeks the background and context knowledge you needed for it. So when I do these shows, I genuinely try to deliver actual value. And when I make these sort of statements about myself, I do have the readies to show you the proof, the receipts I can actually deliver. And anyway, are these moves realistic? Yes, they are. So the second part of putting this into context that I wanted to do was to take one of these charts. Let's take Solana, again, one of the biggest coins, and put this into context and see, well, if it went up that much, what is that? Is that it going up to its all-time highs? Will it definitely drop from it? Is it difficult to move higher? Could it be a trend? Could it go up there and continue further? Could you buy into this and maybe hodl it and come back in 6 months or a year and find that you've made double, triple, quadruple your money instead of just a 50% move? Is that possible? Let's look at a bigger time frame. Here's the daily chart, and you can see that this area, if it turns out to be a bullish inflection zone after having had a range and consolidation period, is way off the highs. If it wanted to go back to the highs from here directly straight up 169%, that's not even the all-time high. All-time high is 217% higher than it is now. So yeah, there's a lot of room. The idea of asking, can it move up something like a 50% move, is very easy, because all it does is it take it back towards its prior range. If prices move from a range to another range, from this green box here to this other green box here, from one range to another, as Ed Sequoia said in the Market Wizards book, I like quoting that guy. It's something I already knew, but when somebody else has said it and it's got a name that people might recognize, yeah, let's say it. Anyway, as he said in the Market Wizards book, that typically when you hit a range, you'll go 50% of the way into it again. Just typically, it happens all the time. It happens so much that if you bet against it, you will lose money. If you bet with that concept, you will make money. If you bet against it, you lose money. So let's bet against the thing that typically has proven out over time to be a money maker, and say that the prices go halfway towards that instead, and that's a 80% or to 90% increase. Right, so that's just kind of putting this into context. I think that I would be remiss at this point if I didn't point out the bearish side, because there will be some experienced traders right now who are looking at this and saying that if you take from that high to where it is now, that's a bear flag. This recent consolidation is a bear flag, and the move down would take this to something like $40, and that is a huge hit. And while Solana can survive a move down like this to $40, if we look at another one of these charts, like the 1-inch chart, which is already, this range here is on, I think, an all-time low range. No. Yeah. So this is an all-time low range that we're in on the chart. So like, I can't go back and find an historical precedent and say it was already this low before. So it's not like Solana, which had much lower lows in the last few years that it could move down to. This is very different already in the low, all-time low stage. On the one hand, that does mean that you could think that it's more likely to go back up again, in a sense. And I'm not pushing that notion, because it's very much oversimplified and basically wrong to say that. But the general point that I'm making, which does have a more sophisticated but takes too many words to explain rational reasonable reason for saying it, is that, you know, this is at lows. I'm looking at this and asking the question about whether or not it can retrace back up towards highs. If it didn't, right, if it didn't, then because of the way that this has come down so much, let's call just this the flagpole from here down to the lows, that if it were to go on again down further, that would be going down to, much like oil back in 2020, be going right down towards basically zero. That's 4 cents from 10 cents. That's a 60% decline from where it is now, if that's a bear flag. So huge things. Solana could go down from 90 to 40. This could go from 10 to 40. You know, that's the sort of the issue if it was bearish. So I pointed that out. It's for sure. If we move back up the way though, on a similar sort of basis, anything up here could be huge gains. Moving to its prior high on this chart, 152% up. Move up towards the prior lower high, 290%. The prior lower high to that, this is actually really way more interesting than I thought it would be. Prior low to that is 530% up. The prior low to the prior lower highs is like a tongue twister. To that is 595%. And if I keep doing this, and keep doing this, then you'll just get bigger and bigger numbers. Now, is it actually that this coin is completely dead? I don't think so. Please correct me in the comments if I'm wrong. This is 1 inch. If this is one of the ones that's been declared dead, let me know. I'm pretty 99.9% sure that this is still an absolutely active, healthy project that just got no reason to consider dead. So we go up to the prior lower high again, the next one up, let's call it here, that's 900%. Let's go to the next one here, that's 1,800%. And let's go back up towards the all-time highs, would be a 5,000 to 7,000% move up, you know, depending on where you want to draw your ruler to. So these opportunities are fairly big, much bigger than they are in the likes of Bitcoin, which, to go to its all-time high, as a reminder, is a move up of, and you know, even if I measure this badly, it's a move up of 80%. It's way less than 7,000. 70%, maybe you get a rise of 70% on Bitcoin. So there you have it, folks. My thesis for today is the context in the world is wrong. That Korea has had to say Korea is dumping and that should cause fear on other markets is wrong. The news headlines today said that Asian markets were dumping. And when you wake up and you look at the headlines for yourself, you can figure out your own story. In moments like this, when volatility is high and certainty is extremely low, there's a huge ringing alarm bell of opportunity for you if you can understand where the pivot points are in price, because that is a change in the risk dynamic, which was suddenly a high risk, high reward trade, but can become a low risk, high reward trade. In today's show, I've pointed out a couple of low risk, high reward trades, such as on oil, and I've used the price expansion percentage numbers to show you that large moves are not only shocking, are not only not as shocking as you feel they are, but are more common. And in fact, that the prices which are causing major headlines like oil right now need the context of their prior highs and lows. They need the context of that range to truly understand if the headline is true. We broke down the idea that inflation would be caused by this recent spike in oil, and we broke down the idea of supply versus demand in oil markets. We broke down the idea of Asian markets dumping due to Iran, and we talked about cryptocurrency and opportunities that exist, but not in a cryptocurrency degenerate screw the traditional markets, I'm a rebel way. Instead, by looking at them and looking at the opportunities that exist in other markets like oil and applying the same logical framework to the crypto charts, which are positioned very similarly to how oil was before it had a run up, and say, what technical factors can we see at a glance here that will help everyone in the audience, whether they're a new trader or a pro, just with a bit of context, a bit of calmness, and seeing through the noise of the story. The result is that we've looked at it and said, hey, if prices drop down on this below these key levels, it could go down to shockingly low amounts, like on the 1-inch chart. We've asked, is it dead? And we've considered, without FOMO and without outrageous hype, what the negative side could be, as we've looked at the positive side and thought, is there a way to take a chunk of that 8,000% potential upside and explain it in a way that's got no FOMO, no fear of missing out, and is calm and cuts through the noise and the BS? In recent weeks, we've talked about who's going to take over in Iran, or how to understand what happens during times of war. And I've managed to deliver the things you need to hear in a way that is cooperative and as a peer. And every joke that I've made in today's show with regards to politics and laughing at how terrible the situation is compared to even 20 years ago, when it was publicly laughed about around the world how bad I'll fool me once, you fool me, you better not fool me three. We can live, I believe that mankind can live in peace and harmony with the fish. President is now looks like the smartest, coolest, clued in guy ever compared to the current situation. So I've managed to cut through all of that in a way that doesn't offend any of the America First MAGA or Democrat people in America. Oh my goodness. How did he do that? This is the type of show that brings everybody together, gives them clarity, because I don't use your emotions against you. The national news uses it against you. All the politicians use them against you. The radio shows, the YouTubers, everybody use it against you. I don't. I'm here to be your enemy, your ally, against your enemies. My goodness, let's do this. Let's take it down together. I'm happy to be here. I'll be back here next week. Leave a comment below this video. I appreciate you tuning in.